So despite the weekly close below the 50 weighted moving average, the price of Bitcoin has started to show a bullish move. But is this an actual bullish move, or is this just a temporary rally before heading towards the original trend duration? Because if you look at this price action in a different time frame using different scenarios, yes, we are still below some of the key line of resistance which we have to flip into support if you want to see an actual bullish continuation playing out in price action of Bitcoin. So today in this video we are going to talk about all of this one by one, but first thing first, let's destroy that like button. And to those individuals watching this are the first time to hit that subscribe button. And guys, let's try to reach at least 1,000 likes in this video, because video like this takes a lot of time, takes a lot of energy. So if you appreciate what I'm doing, if you are enjoying my content, then definitely destroy that like button right now. So first thing first, before jumping into the price action, I want you guys to be aware of the upcoming event. I mean, this week, major US economic reports and Fed speakers, because if you look on 21st of August, which is tomorrow, we have minutes of Fed's July FOMC meeting. And 22nd of August, we have initial jobless claims. And on 23rd of August, we have Fed Chair Jerome Powell's speech at Jackson Hotel retreat. These events are very, very important to determine the trend duration, not just only for the traditional market, but also for Bitcoin. So if we see something positive coming out of this event, then I strongly believe this 50 weighted moving average will be turning into support and not as a resistance. And this weekly is also going to close above it, which will be resulting in a bullish move. So first thing first, let's look at this weekly candle, because in a weekly, yesterday when the price of Bitcoin was below this 50 weighted moving average, I showed you guys that in the past price action, failing to find support over this 50 weighted moving average in a weekly time frame has resulted in a very, very bearish move. And since the price of Bitcoin was also below this 50 weighted moving average, we were expecting a move to the downside. But if you look at the upcoming events, the market is taking it positively. So if we see a weekly close above this 50 weighted moving average, then this here will result in another continuation like this. I mean, the event which is upcoming will be favoring the longs despite the weekly close below the 50 weighted moving average. Because if you look at this in a bigger picture, this is still an descending broadening wedge, and parallelly beside this descending broadening wedge, the price has also overcome one of the most important resistance, the falling trendline resistance from this bump and run reversal bottom. Because in the past price action, this trend line rejected us again and again. But now if you look at this price action, we are not just only testing it, but we are clearly above it. I mean, this is a clear breakout. So according to this bump and run reversal pattern, you can see the price of Bitcoin actually is turning bullish despite the weekly close below the 50 weighted moving average, because we know this breakout parallelly has also resulted in another descending broadening wedge continuation, a bullish continuation. And as soon as the price flips this key line of resistance into support, you can see the price objective sits above 65,000. Yes, you heard that correctly, guys. Despite the weekly close below the 50 weighted moving average, the price of Bitcoin is turning bullish and also looks like it might be breaking out from this key line of resistance, because we are aware this trend line, this key line of resistance must be broken if you want to see the price of Bitcoin turning bullish. Because even with the help of this ascending channel, the upper trend line acted as a strong line of resistance, whereas the lower trend line acted as a strong line of support. So if the price actually breaks out from this key line of resistance from the descending broadening wedge, breaks out from this ascending channel upper trend line, then you can see we might be also breaking the resistance which you have around this 63,000. Yes, guys, the most important resistance is around 60,000 to 63,000. So only after breaking out of it, we know this here is an actual bullish continuation. Otherwise it is going to play out in this manner. Price after this bullish move could be heading towards this lower trend line again before looking for another opportunity. I mean, failing to break out of this key trend line means the price could still be preparing itself for another continuation. So before jumping into any trade, first let's see whether the resistance which you have right now in between the 60,000 to 63,000 gets broken before jumping into any trade, because otherwise it could still favor this dead get bounce trading pattern, a bearish continuation pattern. You can see this here was a retracement, just like from this example. After this bearish move, this was a dead cat bounce, 50% retracement. We came up to the 61.8%, but we know this key line must be flipped into support if we want to invalidate this dead cat bounce trading pattern. So regardless of this bullish move what we are witnessing right now, unless we break out from this key line of resistance, the 0.5, 0.618 Fibonacci resistance, this ascending channel resistance, descending plotting wedge resistance, and even the resistance from the CPI indicator, we are not supposed to get excited, because as long as the price remains below this CPI trend line, as long as the price remains below this Williams alligator indicator, this entire bullish move could still fake out. Yes, you heard that correctly, guys. Price remaining below the CPI line means any sort of a pullback doesn't matter, it could still fake out in this manner. So to avoid this bearish move, we have to flip this key resistance, the top, central, and the bottom CPI resistance into proper support, because as soon as we do that, you can see not just only 65,000 but even 71, 72,000 will be attracting us according to our leading indicator. Yes, guys, as soon as the price overcomes the resistance from the CPI line, as soon as the price overcomes the resistance from this Williams alligator indicator, not just only 65, 66, but even 71, 72,000 will be attracting us, and price after that could be turning very, very bullish. So all eyes are definitely going to be around this key resistance, which you have in between 60,000 to 63,000. Only after breaking out of that line, we know it is going to be looked as an actual continuation pattern. Otherwise, it is going to be a fake out. Despite this bullish move, it is going to turn out into a fake out. So please, guys, please be aware, right? Do not over leverage yourself. Use proper risk management strategy. Otherwise, you will get burned. So this is what I wanted to share with you in this quick update. If you enjoyed my vlog, then please, guys, please do not hesitate to destroy that like button. And to those individuals watching this for the first time, to hit that subscribe button. And also a quick reminder, if you haven't claimed these free bonuses from Bybit, Phemex, and OKX, then definitely check the video description. And by saying this, I'm signing out until next time. Bye bye.